Welcome to Debs and Creds, where we focus on bookkeeping, accounting, and finance for nonprofits and contractors. In this video, we're focusing on the 1099. 1099 filings are due at the end of January each year, and hopefully this video will give you some additional insights into how to complete that filing successfully. In upcoming videos, we'll also talk about the chart of accounts and include a free template that you can use. And we'll also discuss things like conditional, unconditional, restricted, and unrestricted grants, and how to determine what's what. But first, let's look at the disclaimers. With that, let's dive into this video about the 1099. The two most common 1099s we talk about are the 1099-MISC and the 1099-NEC, and they have different purposes. Now, we're not going to dive into the details of it, but here are the rules as posted on the Internal Revenue site. It's pretty self-explanatory. The key to a successful 1099 filing is to have a W-9 when you engage a vendor. Their name, their business name, and then indicate whether they're a sole proprietorship, a C Corp, an S Corp, a partnership, etc. And that will help us determine whether or not we need to file a 1099 for this particular vendor. With that, let's take a closer look at the instructions for the 1099-MISC and the 1099-NEC. So here we're taking a look at the 1099-MISC or miscellaneous. Scrolling down, we see that the rules stipulate that we need to file a 1099-MISC for at least $10 in royalties. There are instructions on that, broker payments in lieu of dividends or tax-exempt interest. But for most of us, it's about the $600 in rents. And rent is something most businesses pay. So this is something we need to be sensitive to. And there are, of course, prices and awards and other income. And we really won't dive into that. Let's just scroll down and take a look at the rest of the form. And here are some exceptions. Payments do not have to be reported on Form 1099-MISC, although they may be taxable if it's to a corporation, an LLC that's treated as a C or an S Corp. This is why getting the W-9 is an important part. However, some payments to corporations are reportable, and that is explained elsewhere on this document. Looking at rents, any rents that you pay in excess of $600, such as for real estate rentals, office space, etc., require a 1099 MISC. However, if you end up making those payments to a real estate agent or a property manager, you may not need to file a 1099 MISC. Machine rentals is another topic. If you do that, take a close read of the rules for that. Scrolling a little further down, we get to the 1099 NEC or non-employee compensation. And here it is. The 1099 NEC is something that you need to give to people who perform a service for you of at least 600 in a year. And it says here that services performed by someone who's not your employee, including parts and materials, and payments to attorneys. Now remember that if you end up withholding any federal income tax for someone, a 1099 NEC also needs to be filed. Scrolling down to the bottom, we see that this document is 12 pages long. So this is a great resource if you're trying to understand and you have complex 1099 requirements. But for most of us, it's a straightforward $600 threshold, the rental component, the 1099 MISC, and the 1099 NEC. Moving on to the W-9, these are the instructions for filling out the W-9. There are some rules that specify that after you've asked for the W-9 a certain number of times, you may be required to withhold taxes at 24% for any payments. And this is something you should be in tune with. So if you did not get a W-9 up front and you've tried to get it following these instructions and they have not complied, you're required to withhold 24% and remit that to the IRS. The W-9's purpose is to request taxpayer identification, and that can be a social security number or it can be a EIN. And it's from an individual, a partnership, any estate, etc. And looking down to the bottom of this page, we see it's not that long. It's just about 7 pages long. So it's worth looking at it if you can. Now let's take a look at QBO. Here we are looking at QuickBooks Online, and we're looking at the main page, the dashboard for a client. We've grayed out certain areas of this to protect privacy. If you've entered the data into QBO effectively, you should be able to generate reports. Go to Payroll, select Contractors, and you'll see a list of your contractors on the left with information like a W-9's ready, etc. But we can select the Prepare 1099s when we're ready to move forward. This one shows that some are W-9 ready, others are missing data, etc. Let's go ahead and look at what the Prepare 1099 options are. Now, QuickBooks offers two versions, using QuickBooks to prepare your own 1099s or let QuickBooks do it. Now, in this lighter version, we can see that the first three forms will cost you $5.99. Forms 4 to 20 will cost you less. If you choose the more advanced version, the first three forms will cost you $14.99. Forms 4 to 20 will cost you $11.99, and so on. But these are the benefits that we get. So let's try it out. And it'll ask you to identify your company information, etc. We've shaded some of that out. Confirm that information, and then it goes ahead and creates that 1099 form for the ones it thinks are ready. And when it's done, it tells us who gets a 1099 NEC, but we need to update the account mappings. Because a contractor may do, say, for example, accounting for you, but you may also pay them for cab fares or travel or other direct expenses incurred on your behalf. And that should not be reported on the 1099. So we need to go through this and select the accounts that are applicable to the 1099 MISC or the 1099 NEC. Getting the selection process correct is important to make sure 1099s are properly processed. So for this particular client, we've gone ahead and identified all the expenses that really should be 1099 eligible, let's call it that. And we can add an account by clicking right here. And then when we're done, we save. So we've updated the account mappings, and now we have a report, and we're ready to actually generate a 1099. But some of the things you might want to look at are looking at expenditures and then vendors and getting a list of all the vendors and looking them over to assess whether or not you needed to file a 1099 for them. Did you inadvertently fail to check some of these vendors as being 1099 eligible or businesses that require 1099? When you set the new vendor up, you need to type in the company name, the vendor display name, etc. And then you go down here and you tend to check that track payments for 1099. And then you enter the business ID or social security number. While that's done, that's not enough to send a 1099. You also need to enter a mailing address. It's important that for all vendors who need a 1099, we capture their address and their tax identification number. In this case, we're going to exit. Another way to look at that is to go to reports and then find a report, expenditures by vendor, and then go ahead and change the dates on it for the full year. January 1st to December 31st. And then we're on the report. And we get a list of all the vendors that we've paid. This gives us another opportunity to assess whether we've categorized the right pool into 1099. And that brings us to the actual 1099 forms. Here's the first page of the form set and provides some directions on how to fill this up. It's for informational purposes only, and copy A appears in red. So if we select that, we can see that this particular copy is miscellaneous information for the Internal Revenue Service Center, and each vendor gets one of these. And then here's one for the State Tax Department. And then the next page shows us the copy that goes to the recipient. And then there are instructions for the recipient, and then there's an extra copy, copy 2, to be filed with the state income tax return where required. This means that a form needs to be filed with the IRS, a copy needs to be sent to the vendor, and you need to keep one for your files. And this can get pretty complicated. But once you've done a number of vendors, it's time to move on to the next form. This is the form 1096. The 1096 is an aggregate form that's used to report what kinds of 1099s you filed with the IRS. So here's that 1096 annual summary and transmittal of U.S. information returns. And for this, you need to go ahead and fill in your contact information, telephone number, et cetera, the taxes withheld, and the forms that were filed. And you need to return this entire sheet to the IRS. So because of this added layer of complexity involving mailing and aggregation and reporting, many people use third-party providers to do the filing. And it might be one reason to use the QuickBooks Online 1099 filing. I hope that helps, and that brings us to the end of this video. Now keep in mind that in the upcoming videos, we're going to be talking about a chart of accounts for nonprofits. We'll include a template for your use. We're also going to talk about conditional, unconditional, restricted, and unrestricted accounting for nonprofits. And we'll touch on a number of other interesting topics. I hope you found this video informative. If you'd like to get updates on the chart of accounts and how restricted, unrestricted, conditional, and unconditional are treated, subscribe. And thanks for watching.